Ladies and gentlemen, we have lots of Tesla stock breaking news today, and some of it really good, some of it sounds really bad, including Tesla's sales and market share that is declining in California. Not a huge shocker. Piper Sandler that has lowered their Tesla price target down to only $400 per share, expecting Q1 to be a quote non-event, but suggesting Tesla is just one good headline away from a large rally. Cantor Fitzgerald's analyst Andre Shepard today says you are seeing consumers in China starting to opt for Chinese electric vehicles instead of Teslas. He says this is not really a problem right now, but something to watch out for, and he does have good and bad things to say about the Tesla story right now. We also have about 25 new job openings in India as the launch in that country is imminent. All of this and much more in today's episode. Hit the like button and subscribe to the channel if you have not done so already, and let's get started. So first things first, let's start with Piper Sandler. Piper Sandler clips Tesla price target, expects Q1 print to be a quote non-event. They had a $450 price target on the stock. They lowered it to $400. Big whoop. The stock's $240-ish right now. That is massive gains over the next 12 months. Now, they do expect the car maker to deliver an underwhelming first quarter report and expect that this will be a non-event at best, unless Tesla provides specific updates on future vehicle platforms or its robotaxi ambitions. Piper Sandler analyst Alexander Potter and Ben Johnson said in this note today that, quote, gross margin is probably trending near multi-year lows. I would push back on that at least a little bit. There was this article on March 14th that says Tesla plans Model Y costing at least 20% less to produce to defend China market share. So if that's true, that should actually help to boost margins in the coming quarters. Nonetheless, alongside the price target, the analysts also lowered their earnings estimates for 2025 and 2026, with earnings per share EPS now projected at $2.30 and $3.33 for next year. They go on to say that they really value Tesla at 100 times 2026 earnings. So that's like $333, but again, what's the upside to that? By 2026, you're paying attention to 2027, and earnings should be, you would expect, over $4 by then. And that's how they really come to their price target. Now, they go on to say that investor attention has recently been directed towards Tesla's progress on its so-called Model 2 vehicle and autonomous ride-hailing technology. But the analyst noted that without disclosure on specs or pricing, it is hard to rely on new products for delivery growth. So really, we just want clarity. We just want a roadmap. When are these vehicles going to launch? How fast are they going to scale? What price point are they going to be at? What kind of market share could Tesla gain? Those are the details we don't have any answers to. They say despite the near-term caution, the brokerage continues to flag the potential upside tied to full self-driving FSD software. Quote, full self-driving FSD software accounts for the bulk of our 20-year profit outlook, the analyst said. They believe even a single headline about robotaxis would likely change the narrative. And I don't know about you guys, but this one paragraph makes me want to go margin everything in Tesla. Because 20 years? No. Optimus is going to be the main thing in 20 years. Full self-driving is going to be an afterthought 20 years from now. The value is already going to be accretive from that. It's already going to be realized. 20 years from now, it's going to be full-blown Optimus. And by then, likely, a dividend behemoth for those of us that are buying today. Like, these analysts are still not even talking about Optimus. And I get it. Optimus is quite a ways down the road right now. Like, this is not something that's going to be here next quarter or to a large extent even next year. But if you're talking 20 years, if you're taking a 20-year profit outlook and not talking about Optimus, that's crazy bullish to me. They conclude the note with saying, quote, while our 2 to 3 month outlook leans bearish, remember that Tesla can rally sharply whenever big picture catalysts emerge. The team continued. Analysts said they do not expect significant updates during the Q1 call, but believe Tesla will eventually deliver positive news on upcoming products. When that day arrives, we wouldn't want to be underweight. I think we're going to get good news on Tesla's earnings call. Now, Tesla usually doesn't announce big news on earnings about new products, but I think this time around, given we kind of like got guidance for the cheaper, lower priced Teslas to launch in first half of this year, there's, last I checked, only a month and a half left in the first half of 2025. We probably are going to get a date set for a Model 2 event. And you're probably going to get some kind of guidance for deliveries are going to start in July or start in August or something along those lines. They're not going to show you the product. They're not going to unveil it on the earnings, but they're probably going to give you more details on this. What they think maybe the price point's going to look like, a rough estimate. They're going to try to talk up the Model 2. They're going to try to get the stock to move higher. That I can almost guarantee you. But the big thing, again, Model 2, but also Robotaxi. Now, we all know Robotaxi is going to launch in June in Austin. That's not the debate here. The debate is how fast does it scale? So if you're taking a bullish stance on Tesla right now, like I am, you're essentially, whether you know it or not, making a bet that Robotaxi scales faster than the markets are expecting. Now, the bar is set low, which is good news. We're only expecting California and Texas. That could be a city in each state. I mean, that's a low bar, considering we could get other cities that could also launch Robotaxi. You could be talking New York or Vegas or Phoenix or Miami. I mean, any of those other cities to launch this year, Robotaxi, would be a huge positive catalyst for Tesla because it shows it's not just going to be a slow rollout like Waymo. This thing could go national quickly. And that is something Wall Street is not pricing in. Not even close. Now, moving on, Cantor Fitzgerald's analyst Andre Shepard says, quote, "You're seeing some consumers in China now choosing BYD vehicles over Teslas. Quote, there's now the sentiment in China that they're essentially encouraging the consumer to purchase non-American products, or in this case, Chinese products. That isn't good news for Tesla investors. China is the largest global market for new cars and EVs. It accounted for more than 20% of Tesla's 2024 revenue. Quote, with U.S.-China tensions elevated, the risk of a boycott on U.S. brands in China is rising materially, wrote BNP Paribas Exane analyst Stuart Pearson. Tensions with Japan and Korea in the past have driven a near halving in market share of their automakers in China. So there is some historical precedence of this. When there is high emotions and, problems between countries, people tend to side with their country. They tend to buy their country's products. Now, question is, does Tesla have a far superior product that would essentially, it's like the iPhone versus Android. I think even if iPhones were owned by a UK company, for that matter, and we were mad at the UK, people are still going to buy an iPhone because it's that much superior. I feel like that is the case for Tesla. Tesla is like the iPhone, especially with FSD that launched in China. Add that to it, and I think there's a really strong reason to buy Tesla instead of something like BYD. But it is a risk, I will acknowledge, could come up down the line, especially if these tensions continue for a long time. And I did want to share this headline with you. I have no idea where this news agency is based. Philadelphia, maybe, something like that. But one of the main headlines here says driverless cars headed for the highway. Expert says they're safer. It's a very short article. It says Tesla cleared a major hurdle towards rolling out its self-driving cars in California by getting several approvals to start the company's long-promised robotaxi service. So Tesla has gotten those approvals in California. They've had the approvals in Texas, but California tends to move slower. So if they can get it in California, they could probably get it in other states as well. Director of Policy at NetChoice, Patrick Hedger, says that full self-driving cars are more road safe than drivers behind the wheel. We're talking about saving tens of thousands of lives with this type of technology if it is deployed nationwide. Now, this article from Business Insider says Tesla sales slump in California even as car buying surges ahead of tariffs. Tesla registrations in California fell over 15% during the first quarter. It is the 6th consecutive quarter that Tesla registrations have fallen in the state. Protesters have targeted Tesla showrooms in recent months, rallying against Elon Musk's politics. Now, Tesla's share of California's electric vehicle market dropped from 55.5% to 43.9% between the first quarters of 2024 and 2025, so basically year over year. That's still a very high market share. Don't be confused by what seems like a scary headline. And these registrations, again, were down 15.1% in early 2025, even as overall new car registrations rose 8.3% year over year. Also, kind of important to put into context, Tesla already has like a large customer base in California. So even really strong numbers, like it becomes harder and harder to comp. That's like Nvidia earnings. They have to keep raising the bar, okay? Nvidia is probably going to come out and give us a lower number than we expect, and then there's going to be scary headlines for Nvidia, whereas the overall number is way larger than it was in prior years. That's the kind of situation you're dealing with here. And this news like just came out, so don't be surprised if you hear more about this in the coming days. Like, we tend to be early with news here on this channel. I give it to you as soon as it comes out. Wall Street takes a lot longer to actually pick up on it and to circulate it and to spread their fear-mongering. So be on the lookout for it. Now, as I mentioned, Nvidia said last night it will record $5.5 billion in a quarterly charge tied to H200 processors exported to China. So that is why Nvidia is down today, because they essentially have to pay a big tax. Tesla has launched a new voice AI agent that was built in-house to improve Tesla Insurance customer support. Tesla Insurance customers will no longer need to talk to a human when requesting basic policy changes. The voice agent will complete the changes for you. Also, there's a feature that will summarize your previous call so you won't have to repeat yourself. This new customer support voice AI agent is now available to all Tesla Insurance customers. There's also this article coming out from Electric and Fred Lambert. I think you guys know at this point, he's kind of a Tesla hater. At least these days. Take a listen to this. This article says, quote, "It's like laughable. We credit that shift initiated by Musk for the current slump Tesla finds itself in right now, where it has only launched a single new vehicle in the last 5 years, the Cybertruck, and it's a total commercial flop." The Cybertruck's a flop? Are you serious? The Cybertruck is a gift that will keep on giving. Anytime I even still see a Cybertruck, I'm like, wow. Like, it's so unique. It's so different. 5 years from now, people are going to be like, what is that? You know, that is a gift that keeps on giving. It's genius marketing on a whole different level that Electric would never understand. Now, this article says the executives pointed to an internal report that didn't paint a good picture of Tesla's robotaxi plan. The report has credibility, as Patel commented on it. Okay, Patel, the guy that used to be, I believe it was like investor relations with Tesla, so something like that, or policy with Tesla. Complete Tesla hater these days. Complete Elon, like, does not like the guy for political reasons. If you know, you know, just, I mean, look him up. It says, quote, "We had lots of modeling that showed the payback around FSD, full self-driving, and robotaxi was going to be slow. It was going to be choppy. It was going to be very, very hard outside of the US, given the regulatory environment or lack of regulatory environment." Also part of this internal memo, if you will. Much of the work that has been done by analysts working under Baglino, head of powertrain and one of Musk's most trusted aides, the calculations began with some simple math and some broad assumptions. Individuals would buy the cars, but a large portion of the sales would go to fleet operators, and the vehicles would mostly be used for ride sharing. Many people would give up car ownership and use robotaxis. Tesla would get a cut of each robotaxi ride. The analysis followed a lot of Musk's assumptions, such as that the US car fleet would shrink from 15 million a year to roughly 3 million due to robotaxis having a 5 times higher utilization rate. They subtracted people who wouldn't want to switch to a robotaxi for various reasons, arriving at a potential for 1 million self-driving vehicles a year. They say there's ultimately a saturation of people who want to be ferried around in somebody else's car. Of course, that's with everything. There's always going to be a saturation for everything. We're not even started yet, and we're talking about saturation? I hope you guys can see the issue with this. It says, furthermore, Tesla's internal analysis pointed towards difficulties expanding into other markets, which could limit the scale and profitability of the robotaxi program. Ultimately, it predicted that it could lose money for years. And overall, what a weak argument with a lot of bad assumptions. If you guys see that circulating more today over the next couple of days, I wouldn't believe that at all. To invest in any company, you have to literally have confidence in the executive's ability to handle problems. The only job for a CEO, it's not to build phones on a production line, or it's not Elon's job to make sure the Model Y transition goes smoothly. There's people put in place for that. The only job Elon has at Tesla is making decisions, making good decisions at that. And I think any of the problems that are in that article, and I just picked out kind of the most important parts that I think you should hear, are issues that will be solved. I mean, there's a deregulatory regime happening right now, not just in America, but in the world. If countries want to keep up with America and we are deregulating, what do you think China's going to have to do? What do you think Europe's going to have to do? They're not going to have a choice. It's like you're competing in any product category ever, right? Once people realized, well, phones with screens on them instead of just buttons was, what consumers wanted. All of a sudden, if you did not have a screen on your phone, a touch screen, you went out of business, okay? It's the same for any product that has ever been around ever. And competition. We are in competition with Europe. We are in competition with Canada. We are in competition with Mexico. We are in competition with China and in India and in the whole East Asian region. They're going to have to deregulate. They're going to have to open up markets. That's just what it is. So this whole argument that Tesla is not going to be able to get into other markets, I think is just BS at this point. Now, in some cool news today, the 2 giant 45-foot LED movie screens at Tesla's upcoming Hollywood Diner and Supercharger have now been turned on. And Tesla seems to be planning to source battery materials within India. Tesla is now hiring for a supplier industrialization engineer, battery material manufacturing supply chains. Quote, this role will be responsible for selecting, qualifying, scaling battery cell materials such as NMC, LFP, precursor, graphite, LiOH, cathode, electrode, PVDF, LiPF6, etc. Manufacturing processes and quality system at Tesla supplier locations. In this role, you will work closely with many organizations, both internal and external to Tesla, taking new battery designs from initial concept through into full production. Which clearly this is a great sign. India 5 years from now is going to be a massive market for Tesla. And if they can ever get FSD into that country, yeah, that would also be huge. And Tesla now has a total of 25 job postings within India. And the man accused of setting fire to multiple vehicles at a Tesla collision center in Las Vegas has pleaded not guilty. Hyundai has set up a new task force to develop its own electric car batteries. This is said to be a reaction to the new battery from BYD, which can be charged with up to 1,000 kilowatts. Quote, there are growing concerns Hyundai could fall behind. Bloomberg said today, which this is insanely bullish for robotics in general and for AI. They say, quote, in theory, Trump is trying to use tariffs to force a revival of American manufacturing, but companies already can't get enough workers for the US factories they do have. That's true. People don't want to do the same task, boring task at that, every day, 7 to 10 hours a day, for the rest of their life. Okay? People, like, even if you pay them well, they still won't do it. Not for long periods of time, that is. They get bored. They don't want to live their life that way. Sorry if that's one of you guys and you hate your jobs. Like, there is no amount of money in the world where I would do a job where I absolutely hated it. And that is something I would absolutely hate. Going in, stamping metal or doing the same BS task every day. Sewing clothes? You're never going to get enough people to do that in America. I don't know if Trump knows normal Americans these days, but you're not going to get someone to sit at a sewing machine for 7 hours, let alone an hour or two, and do that for long periods of time, for years and years. It's just not going to happen, even if you wanted to pay them well. So that's where Optimus comes in. And you can, make a very strong case for sure. If we want to onshore things, that's fine, but we're going to need millions of Optimus robots to be able to do that. Now, there was also some really false news that came out this morning that sent markets lower. The headlines came out that the US announces a 245% tariff on imports from China, but this is not true. Like, everyone was reiterating this headline. What it actually is the 125% tariff that is in effect. There's a 20% tariff for fentanyl, so you're up to 145%. And there is a 7.5% to 100% additional tariff on specific goods, okay? So some goods are tariff right now at 245%, but that has been the case. That's not new information. There was no new tariff put on today. Option activity today for Tesla is on the low side. You have 32 different trades totaling $34.25 million with a positive order value of 48%. So kind of neutral, but a low dollar amount. You do have, I'm not even going to say that, we're going to round up, 667,000 shares that are being covered on today. So hedge funds institutions are actually incrementally more bullish today than seems like they were yesterday. And I have to tell you guys, I'm bullish on Tesla here. Could the stock fall another $100? Yes. If the economy weakens, if we go into a recession. Now, we've gotten some bank earnings that have come out, and none of them are warning about the consumer. They're saying the consumer is still doing just fine. And until we see job losses, as the just kind of bigger picture here, we're not going to get a consumer that weakens to the point of recession, which, that makes sense. Now, it depends if these tariffs actually go into effect. If these tariffs go into effect, then companies are going to have to raise margins internally. There's really two ways they can do that at this point. Become more efficient, use something like AI to improve margins a couple percentage points, or they can fire people. And, both of those things would happen if tariffs go into effect. The idea is not to have these tariffs go into effect. What I think Trump really wants is he wants TikTok from China. What a great legacy that would be for Trump. He saved TikTok. Honestly, I can't think of a better legacy that Trump would want, right? I think he also wants countries in their trade deals to agree to buy U.S. bonds to lower interest rates, to give the long duration yields, push them down, essentially, because yield is inverse to price, like a dividend stock. If the price of bonds falls, the yield goes up. If people go out and buy those bonds and the price goes up, then yields go down. What you've seen lately, especially with the trade war, is, well, prices are falling. So that means yields are actually going higher. And I don't think it's because of inflation expectations. I think it's because countries have been selling bonds. And I think with a trade deal, you're probably going to get an agreement for countries to buy a certain amount of bonds. Like, wouldn't that, I mean, that would serve the government's biggest purpose. Lower interest cost as you roll your debt over, essentially. And I do think there's going to be some tariffs on select industries for the future, like pharmaceuticals and maybe semiconductors, things like that. There's going to be definitely some pressure on certain industries, but I don't think Trump wants to nuke the economy. The way that the tariffs came out, he nuked the economy. But it's the art of the deal. That was never the idea. If that goes, well, or somewhat along the lines of my expectations, and there is a deal especially worked out with China, I think peak fear has came and went. Now, it's funny how markets work. Markets in the short term revolve around emotions, okay? And in the long term, they revolve around earnings. Now, I think AI, robotics, long term, earnings are going to be great for certain areas and certain companies, okay? Tesla, big winner there. Robotics, AI, that's what Tesla is. Okay, Nvidia, I think, will do well over time as well. Certain industries, right? AI, robotics. But in the short term, it's all about fear. It's all about the what ifs and what can happen. And that's why we're such a news-driven market right now. But I'm going to go out on a limb and say it's going to be hard to get back to peak fear like we had when the S&P was at 481. It's going to be difficult to get that kind of fear again, unless these tariffs actually go into effect and there is no trade deals done, which at this point seems unlikely to me. Then the question is, how hurt is the economy? If the employment markets hold up because companies are no longer going to be tariffed, sure, their investments slow down, blah, blah, blah. But people still have money to spend, and that's 73% of the economy. So it's a very weird spot that we are in right now, I will say that. But from a purely emotional standpoint, it's going to be hard to get peak fear again. I think we achieved peak fear. Now, for a company like Tesla, especially that is beaten down with big catalyst upcoming, a big earnings report next week, I think that is a positive setup for Tesla, not a negative one. Now, if Tesla does fall, as I've said, you really need to be prepared for Tesla to fall $100 from here or to rise $100 from here over the next 3 months. That's the kind of setup I think we're at right now. Tesla could be a $150 stock by July, or it could be a $350 stock by July. You need to be comfortable with both sides of that. If you're going to get margin called and get screwed if it falls $100, you probably should protect yourself. I'll just say that without giving advice, because none of this is financial advice, just my thoughts. If you don't have enough Tesla and you would be mad at yourself if the stock was back at 350, maybe, just maybe, getting some upside exposure here could make sense. So I think you've seen peak fear in markets. I think you've seen peak fear in Tesla as long as something is not going really wrong internally, which I don't think is happening. That's in a nutshell why I'm bullish on Tesla right now. So let me know your thoughts on all of this down below in the comment section. We did get a speech from Fed Jerome Powell as well today. We will talk about that a little bit more in the next video. And we have huge earnings coming out tomorrow morning that you definitely need to pay attention to. And I will go over all of that with you in the next video. Ladies and gentlemen, hit the like button and subscribe to the channel if you have not done so already. Have a fantastic rest of your day, and I will see you in the next one.